All right, we're live.
Round two.
Round two, technical difficulties. All right, so we know mortgage industry struggling right now, correct? I have lost yet again.
Got it. Okay. All right. Sorry about that.
Holy smokes. How are you?
I'm good now that I figured out how to use a computer. Everything should be smooth sailing.
We wonder why we can't write a lot of loans right now. We can't even get on the computer.
My goodness, everything's changing. Updates everywhere.
All right, so big news last week was Wells Fargo, one of the big three lenders, called it quits in mortgages, said no mas, we don't want to do them anymore unless you're a current or existing customer of ours. So sent a little shockwaves through the system, but before they decided to pull this trigger, we've been found the big banks and the banking institutions, their earnings reports as they come out every quarter, and it was an abysmal 2022. We're waiting for fourth quarter numbers to come out here in the next 1 or 2 or 3 weeks. So that's going to again show us what lenders are doing or they're not doing to survive this slowdown that they're seeing. Blah, 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 long-winded.
No, it's a really bizarre time where if you look at the industry in total and you're looking at the recent past, it's not real good news, meaning it's massive contraction in the industry. Players are leaving the market. That's bad. However, the recent news maybe from the consumer side is that it's improving. Now, that improving part takes some context, right? Meaning that the last 2 months, the industry from a consumer side, meaning the amount of people interested in applying for a loan or buying a home, was as bad as you and I have ever seen it in the 26 years we've been doing this. So there's been some improvement, but again, that bar to get over was so low. But again, looking forward, we've got some reasons to be somewhat optimistic. However, the industry still tons of turmoil to get through.
Yeah, so these guys are trying to navigate expenses, payroll being the biggest. As they, what we're hearing from these banks and the lenders that we work with is there's just not a lot of things for the people to do. And they're trying to stretch in, 4-hour day into 8 hours and pretend like they're busy. So they've been doing a lot of the same things that we've been doing over the last year, which is you have to let people go to survive it. But they're now starting to offer incentives, or they're looking for loans desperately.
I think that was the big thing about Wells Fargo, right? As we were showing here, they go from the largest mortgage lender in the country in 2019 to now they're at the spot where they say, hey, we're only going to do mortgages for existing customers. And it's that last line there that just says the mortgage business is going to be difficult in the foreseeable future. That doesn't mean it's hard for a consumer, but it's difficult to get back to volume levels to support the compliance and the staffing and the ebbs and flows of a mortgage business, which are difficult to deal with. So
there's no doubt about it. They loved the last couple of years.
Yeah, it was news that said, hey, now somebody's going to finally admit that it is difficult in the mortgage space and will be for a while.
All right. So housing the last couple of years, builders have made a truckload of money. Lenders have made a truckload of money. So now you're seeing both of these lines here looking for loans because they're looking further out in the future. They're burning cash every month.
Mhm.
So now they're trying to figure out, how do we get somebody to use our how do we get someone to buy this home that we're building, or how do we get somebody to use this mortgage when a lot of people aren't buying homes right now? What can we do from our end?
That's very well said. If we kind of look back at the prior 2.5 years, there was high mortgage volume for the lenders. There was high sale volume or traffic with the builders. So I think these all pertain to the same thing. As that volume is increased and there's a lot of people participating, you get a chance to sort of take the cream of the crop when you have more demand than you have supply. So larger down payments were prevalent. Credit scores were at all-time highs for mortgages that were being done. We all know the removing contingencies and going in above asking price. So if you had a lot of cash to work with, you had a greater chance to win. We had some scenarios or heard stories that during all that frenzy, loans took, I don't know how many times we talked to people that went through a bank and they were 3, 4, 5 loans or 5 months, excuse me, to get a loan to close. And then, of course, like you said, margins, the amount of money that they make per transaction was at all-time highs.
Absolutely. Nothing there that people have already forgotten. They're still, that last spring has really done a number on many folks that are still trying to buy. And that brings us over to the next line item here.
Here's the reason for optimism from the consumer side, right?
Absolutely.
Yeah.
Again, this isn't the right time for everyone to go, but this is the right time for some to go. And I know people think that that's crazy. They think that, oh my gosh, home prices could still continue to drop. Mortgage rates are high. Who wants that high of a payment? But there's a certain segment that should be doing something. And that segment's small. We're not saying it's large, but those are the people that we're trying to reach right now to say, hey, it's okay. Don't let anybody shame you that you're out there actively looking for homes right now if it's a long-term play for you.
Very well said. The part that I, get optimistic for when we hear the stories of or reminisce about the stories in the past 2 years where first-time home buyers that don't have excessive cash to work with, now they have an opportunity to actually get a seat at the table where that was almost impossible in the past. So back to what you're saying, that group specifically, if you have the ability to put an offer in and negotiate with a seller and get their undivided attention without somebody else knocking on the door and wanting to put in an offer, you have the ability to win. You have the ability to use a low down payment. You have the ability
compare that to buying a car right now.
Well said.
So you try to buy a car in the last year and a half, you're paying over MSRP no matter what dealer you're going to, because the inventory was so small, you couldn't get one. And that's a lot like what was happening before. Well, now basically people are able to pay MSRP on a home or list price or come in at lower than list. There's not to say that there are bidding wars. Some of these people are starting the list price on these homes lower than market value in an effort to get multiple bids on it in an effort to sell the home. So it's a very delicate thing, but most folks are not paying over list price right now.
That was exhausting. Yes. Not your conversation, the paying over list price. Yes.
Credit scores decrease. Okay. So again, those that did right last year.
Mm-hmm.
Those were your A paper borrowers, we'll call it. And the average credit score people or the slightly below average didn't have a chance to compete.
Correct. Yes. So that FHA loans, the percentage of transactions that FHA loans were used on was the past 2 years was the smallest point that we've ever seen in our history of doing this for 25 years, 26 years. And that's not healthy, meaning that FHA loans should be between 10 and 15% of the transactions, or 15 to 20, and they were down in the 5 or 6% range. So this is a good thing, meaning it lenders are easing the credit standards a little bit to allow more people, but just the fact that lesser credit score people now have a chance, it's a big deal.
Yeah, not everybody can have a 750 plus credit score. Poop happens. So
Right. Life gets in the way.
Exactly. That brings into the lenders easing credit parameters. Yeah, they will bring those down. Again, they're looking for loans as well. They can't be as picky with the filter because there's not all 750 plus people looking for homes. I love this. More accountability for management. That just is what it is. When there's less to work on, it's easier for the management to see what needs to be worked on, and stuff just happens to go through quicker when
Right.
there's
And
less loans.
we've experienced that. When there's less loans, it's easier to get it to a step up or 2 steps up. And the higher you get within the organization, the more knowledge and the more maybe ideas or creativity on ways to get that loan from what might be a no-go to yes, we can do it. So again, more good stuff there. And then everybody loves loans to close faster.
Speed.
Yeah.
Okay, so lenders margins. I mean, one of the great things about being a broker is, we're working with, on any given day, we'll call it 10 wholesale lenders. And these 10 are fighting each other to get a piece of the pie. So you're seeing some of those lenders taking below market, offering below market rates or lower than the average rate because they need loans to get through the system, to keep everybody busy and working on something. But those lenders that are doing that are in this for the long term, the long haul. It's not all of them are making the amount of money per loan that they would want to right now, but they are here to stay. And that's just what they need to do right now to remain in business, is cut margins.
It's very well said, for sure. So again, we looked at that and said, hey, the industry from the company side of things, there's struggles in there trying to get enough loans to staff properly, maintain service levels. But if we look at this is optimistic for the consumer, in that, again, there's opportunities, as you said, for a smaller segment of the population than what we saw before due to rates. But then, it still is all coming down to the wonderful affordability. And we like to follow this just because it's a great tracking of the recent history. And then we've added in the yellow there what we think is realistic to see as we move forward. And, again, this spot here around October of 2022, when affordability hit its worst spot, just kind of gives us an idea, or can just share with folks of, even if you were to buy now, and you're locked in this example of principal and interest to 1,700, it's possible that there's opportunities to refinance. And it gets back to your spot. Is now the right time to go? For some people, yes.
Well,
for some,
big
you may
concern,
need more affordability.
Sorry to cut you off.
You're good.
The big concern that people are having, that are waiting, or they're wondering, am I waiting to get right back into that food fight from last spring? We hear more concern about that than we do, I'm ready to go and give it a crack right now. Like,
yeah, the fear of competing is greater than the anxiety of paying 6%, for sure.
You don't know what a toll it takes on some of those folks that didn't get into a home and had to re-sign a lease or go live with family. It was not a fun process. So we're still talking to those people that didn't acquire a property last spring, or even fall of 21. So they're still going. It's like, oh my gosh, you poor people. Hang in there, hang in there. Keep saving your money. So again, this is all going to work itself out. It just takes time to get through it. And if we can get back to, if you look at the bottom there, June 30th, 1463, you're basically back to the same spot you were spring of last year.
Yep.
So you're talking about 14 months of, just absurdly high.
And that April of 22, that 4.7, that's a more common or typical interest rate. The period of time before that, it's very, very rare that we get to see interest rates that are below the 4% range or 4.5. So I think this is now a little bit more realistic or reliable to sort of budget around or expect.
I love it. Great stuff today. Anybody have any questions, just reach out to us. We will be happy to walk you through all this fun stuff and get you numbers, etc. But sorry for the technical delays, Ken.
Yeah,
Have a great day.
that one's on me. Take care, bud. See ya.
See ya.